Ever get that feeling when you look at your payslip that something's just not right? You're definitely not alone. Often, the culprit is your tax code, that little string of numbers and letters with a massive impact on your take-home pay. Well, in this guide, which we've developed with the experts at the top UK accounting firm Tax Accountant, we're going to show you exactly how to understand it and, more importantly, how to take control of it. So let's get into it.
You know that feeling, right? You open your payslip all ready to see the reward for your hard work, and then boom, the final number is just lower than you thought it would be. It's that sinking feeling in your stomach.
But hold on, before you panic, the answer could be hiding in plain sight on that very same payslip. We're talking about your tax code. And with a little guidance from our friends at Tax Accountant, we're going to crack this code together and show you how to get back in the driver's seat. Okay, so first things first, we've got to understand what we're actually dealing with here. What on earth is a tax code, and what does it really mean?
Think of it like this. Your tax code is a little set of instructions that HMRC sends directly to your boss. It tells them exactly how much of your pay they can give you tax-free, which then determines how much tax gets taken off the rest. It's the critical piece of the puzzle that decides your final take-home pay.
Right, here is the magic number for the 2025 to 2026 tax year, £12,570. This is your standard tax-free personal allowance. Basically, for most people, it's the amount of money you can earn before you have to pay a single penny of income tax.
So how does that big number turn into the little code on your payslip? It's actually pretty clever. HMRC just takes the £12,570, chops off the last digit, the 0, and then sticks the letter L on the end. That L just means you're getting the standard tax-free allowance. And that's why 1257L is the most common tax code you'll see in the UK.
Okay, here's a quick pro tip for you, straight from the team at Tax Accountant. When you leave a job, you get a form called a P45. This thing is gold. Think of it as your financial passport. Handing it to your new employer straight away is the absolute fastest way to make sure you're taxed correctly from day one and avoid a really common headache.
But what happens when that code is wrong? That's not all. Here's where most people go wrong, and believe me, these mistakes could be costing you real money.
You see, your tax code isn't set in stone. It has to change as your life changes. So maybe you started a new job, or you've got a side hustle. Imagine you're a small business owner in London. You've got your main gig, a couple of freelance clients, and maybe a rental property. Suddenly, your finances are a lot more complex. Any of these things can mess up your tax code if HMRC doesn't know about them, and that's when you can end up overpaying.
Remember that P45 tip I just gave you? Well, this is exactly why it's so important. If your new boss doesn't have it, they'll probably put you on an emergency tax code. It's super easy to spot. Just look at your payslip for a W1, an M1, or an X at the end of your code. If you see one of those, it's a big red flag that something's not right.
So, why is an emergency code such a big deal? Well, a normal tax code is clever. It looks at what you've earned and paid across the whole tax year to smooth things out. An emergency code isn't so clever. It just looks at that one single payslip and assumes you earn that exact same amount every week or month. And the result? You almost always pay way too much tax until it gets sorted.
Now we need to talk about something a bit more serious. Tax advisors hear this panicked phrase all the time. When you see the letter K at the start of your tax code, that's a sign that you need to stop and pay close attention.
A K code is definitely not good news. What it means, in simple terms, is that HMRC thinks you owe tax from a previous year, and they're collecting it now directly from your pay. They do this by basically taking away your entire tax-free allowance and then some, putting you into a negative allowance. It means you end up being taxed on more money than you actually earned until that debt is paid off.
Okay, that's enough of the scary stuff. Let's talk about the solution, because you are absolutely not powerless here. Stay with me, because this next part is your clear 5-step action plan to get this whole thing fixed. Right, here we go, your 5 steps to freedom. Step 1, get your info. Just grab your national insurance number and your latest payslip. Step 2, go online to the gov.uk website and search for the Check Your Income Tax service. Step 3, sign in using your government gateway ID. If you don't have one, don't worry, it's pretty quick to set up. Now for the crucial part, Step 4, check and update. Go through every single detail HMRC has on you, your job, your income, any benefits. If it's wrong, now's the time to correct it. And finally, Step 5, hit that submit button.
So, what happens after you've sent your update? Well, you'll need a little bit of patience. HMRC normally takes about 15 working days to process everything and issue a new tax code to your employer. You should see that shiny new code on your very next monthly payslip. If you get paid weekly, you should see the change within about 3 pay packets. So it's not instant, but the fix is definitely on its way.
Now, that online service is brilliant for straightforward cases. But let's be honest, not everyone's financial life is simple. Sometimes the DIY approach isn't enough, and you really need to bring in the professionals.
Just ask yourself this. Is my financial life more complicated than just one job with one payslip? Are you juggling multiple sources of income? Maybe you're a company director, or you have income from property or investments. If you're nodding your head, then your tax affairs have a few more moving parts, and the online tool might not be enough.
You should seriously think about getting expert help in any of these situations, and I mean especially if you're dealing with that tricky K code we talked about, or any kind of old debt with HMRC. An accountant speaks their language. They can get on the phone to HMRC for you, and honestly, just give you that priceless peace of mind that everything is correct.
And for that kind of tailored expert advice, the team that helped us put this guide together is there to help you. You can contact Pro Tax Accountant directly. Give them a call, send a message on WhatsApp, or just drop them an email. They can handle everything from simple questions to the most complex tax problems.
And if you want to go over any of this again or dive even deeper, Pro Tax Accountant has a really detailed article that covers all of this on their blog. It's a fantastic resource, definitely one to bookmark for later.
And hey, if you found this helpful, it would be brilliant if you could hit that subscribe button. We're always putting out new guides like this one, all designed to make the world of UK tax just a little bit simpler to understand.
Okay, just before we finish, a really important disclaimer. Please remember that all the information here is for general guidance. Your own financial situation is unique, so you shouldn't rely only on this to make decisions. Before you take any action, you really must consult a professional, like the experts over at Pro Tax Accountant.
So I'll leave you with a final question. Now that you're armed with all this knowledge, go and take another look at your payslip. Are you truly confident you're paying the right amount of tax this year? If not, you now know exactly what to do about it. Thanks for watching.